If you guys are using headphones or anything, that could be the reason why as well. Yeah, seems like everybody can hear me, so, or most people can. All right. Hopefully you guys get your situation fixed. For those that can't hear me, it could be your headphones, it could be your volume. Make sure you don't have it on mute. Make sure you have your hearing aid put on or something. I don't know what it is, but hopefully you guys got it worked out. Let's go ahead and get started. Ignore where it says day 2. This is day 1, okay? All right, so let's get started. For the new people that came on, post questions, comment questions on the chats or the post that I've made in your guys' page. All right, so here are a list of most of the vocabulary words that you will be using during the period of the training. You're going to be hearing it, you're going to be using it. That's how we're going to communicate. Basically, this is our language, okay? So we have PIP, point in percentage. That's what that stands for. This is basically how you calculate how much money you're receiving on your trades. Yeah, that's basically it. This is a way of calculating the amount of money you could potentially make or the amount of money you're making. Okay. Consolidation. Consolidation means the market is still. Now, by that, it doesn't mean the market is closed. It means it's moving, but it's moving sideways. It's not necessarily going in a true direction. It's not going up or down. It's just going sideways. All right, now we have the dealing spread. Now, for those that have looked at charts on their MetaTrader or whatever platform you guys use, I recommend you guys use MetaTrader 4, but many people are from different countries and whatnot. So the platform you're using, you're going to have two lines, two price lines that are constantly moving when the price changes. It's telling you the current price. Okay, so one of them is going to be red, the other one's going to be white. Let me show you an example. Okay, so make sure, let me know if you guys can see my screen, if you guys can't see my screen, but here you have a red one here you have like a grayish white one, okay? Now these prices are constantly moving. These are the current prices, okay? Now, one of them is called the sell price and ask price, okay? So one of them, if you're selling, if you're placing a sell, you're looking at the red line here, okay? Once this red line, you guys will see when you place trades, but when you sell, you will start in the negative. This space in between that is basically what your broker is being paid. You're paying them the space in between. The space in between is calculated by pips. Now, when you convert that into your currency, the amount of pips in between here at the time you place the trade, that's the amount of money you're paying your broker. Okay, because they need to get paid. They're running a business, so that's the amount you're paying them. So you're always going to start, not always, but most of the time you're going to start in the negative. Okay, so if you place a sale, your sale will show for the white line. And once the red line crosses over that, that's when you start being in the positive. It goes the same vice versa, okay? If you place a buy, the price shows that you bought at the red line, wait for the white line to cross it. That's when you start seeing your profits.
Yo, so I see that on the chart, the spread says 32. Does that mean 32 pips?
Yeah. Yeah, right here on the top right, currently 29. That's 29 pips. That's the spread. This
Isn't the second digit micro pips and the first digit represent pips, so it'll be 3 pips?
no, not this one. This one's gold. This is not a
Oh, this is
currency.
gold. Gotcha.
Yeah. That's why the spread is so high. But that's the bid and ask price, okay? So, one second, wait for this to load up. That's what's called the dealing spread, the difference in pips between the red and the white line. Now you have gap time. Gap time, you can go ahead and write this down. I'm going to be showing you guys exactly what that is. It's the changeover between sessions. I'm going to show you guys the sessions that we trade. It's basically like a person clocking in and out of work. Okay, someone comes in for a shift, they have a certain amount of hours for their shift, then the next person comes and replaces them. Okay, so it's clocking in, clocking out. Sessions, shifts, they relate. They're somewhat similar. Now, everyone's heard of leverage. You have to choose a leverage when opening up a demo or live account with your broker. So margin trouble is related to your leverage. I'm going to be discussing that more in detail farther into the training. Now we have the HOD and LOD. All right, high of the day and low of the day. That is very important information. So these are all the stuff you have to memorize. Okay, now we have long position. Long position means you're buying. Okay, so it means when the market, either you're predicting it's going to move up or it's moving up. Okay, so when you place a buy can translate to a long. Okay, I'm going long. All right, I'm buying. That's what that means. Going short is the opposite. You're selling. I'm going short. I'm going to short this trade. I'm going to sell this trade. I'm going for a sell. All right, now the market maker trend. The trend means it's been going a specific direction for some time. Okay, now you can realize the trend on higher time frames, the overall trend, mainly on the 1 hour and above. Now to recognize the trend, we will be using the 1 hour and 4 hour mainly. All right, everyone's good. All right, so let's see, one moment. Taking off screen share for a second. Okay, now I'm going to show you guys these session times. Like I said before, clocking in, clocking out. Okay, so these are the session times. All right, go ahead and mark these down. These are extremely important, probably more important than trading itself. I'm sorry, not probably. It is more important than trading itself. You have to know these times.
Agreed. Or else you won't be trading.
Exactly. All right, so we have dead gap. Now, dead gap, these are all in Pacific time. Okay, so dead gap starts at 2 p.m., 5 p.m. Eastern, 4 p.m. Central time. For those from a different country, I can't really, I'm horrible at converting time, so hope you guys can figure it out or know somebody that can. Someone said they can't read my screen. Let me see if I can make this bigger. Oh, looks like I can't. Now, let me try to see if I can do it on here. Okay. One second. I really need to get a new computer. Okay. Let's see. All right, so we have dead gap. Let me know if you guys can see this better. Okay, it's not my. Okay, everybody changed their settings to 720p on YouTube. That way you guys can take away the blur or hit the HD button. Okay, you guys are good with technicals. I suck at it, so I don't believe I can change it myself. But let me go ahead and do this anyways. Okay, so 2 p.m. Dead gap is from 2 p.m. Pacific time to, one second. All right, so 2 p.m. Pacific time, all the way up to, geez, did I really forget? 2 p.m., 5 o'clock.
Yeah, bro, it's 5 p.m.
Okay, 5 o'clock. Now, Eastern, once again, that's 5. Central, that's 4 when it starts. Ends at 8 p.m. Eastern time, 7 p.m. Central time. Now we have Asian session. Asian session goes from, let me just show you this. Hopefully you guys changed your quality of the video, but here it is. Asian session from 5:30 p.m. till 12 a.m. Pacific time. That makes it 8:30 Eastern until 3 o'clock a.m. Eastern. Subtract an hour from that and you'll have Central time. That's Asian session. Now we have London session from 12:30 a.m. until 6 a.m. That's 3:30 Eastern time until 9 o'clock Eastern. Subtract an hour, you have Central. After that, we have New York session. However, from 6:30 a.m. to 2 p.m. Pacific, 8:30 until 5 o'clock Eastern. All right. So now, gap time. What is gap time? As you guys can see between these sessions, I'm sorry, put this 5 o'clock. Don't put 5:30. As you guys can see, gap time, these sessions, there's 30-minute gaps in between each session. There's a reason for it, and I'm going to explain it. Gap time is the 30-minute gap between each session. All right, make sure you write that down.
I also think another way to explain it is just the first 30 minutes of each session as well.
Well, London wouldn't start until 12:30. That's officially when they start. So
Yeah, so the gap time's from like 12 to 12:30, or from 3 to 3:30 my time.
right. Yeah, that would be the gap time. Yeah. All right. So we have that. All right. Everyone has the vocabulary words down. All right. Now, before I go into this, basically what I'm going to tell you is Forex is the biggest financial market in the world. I'm pretty sure most of you know that already, but I'm going to go ahead and repeat it. The potential to make money in this is amazing. There is over 5 trillion of money flowing into the market each and every single day. Okay, comparing that to the New York Stock Exchange at billions. Comparing it to that, the potential to make money is amazing. This is why I do Forex. Another thing, Forex does not have volume. What I mean by it is that there's no limit to how much you can buy in currencies. In stocks, there's a limited amount you can buy. There's only a specific amount of shares a company has. Now that is easily manipulated as well. In the stock market, the stocks can be easily manipulated. So this is why I trade Forex, because it's more difficult to manipulate, but you still have to know what it is you're doing in foreign exchange when you're trading. Over 90% of people lose money in Forex. Pretty sure most people know that, but just repeating it for those that may not. Over 90%. You can be part of the other 10% of winning traders. Now that's what I create. I create successful traders in this company. And you guys will see. I already have many stories. I've helped many people already. And I want to help you guys out too. Okay, so now an introduction to my method. To this method. It's not necessarily my method. Originally, the market maker method came from a guy named Steve Morrow. I'm sure some of you guys have heard of him. He's the founder of the market maker method. Now, my version of his method is shortened and tweaked. I tweaked it so that everybody can understand it, because it is very difficult to understand his method. He teaches his teaching skills are outstanding, but I personally myself couldn't grasp how much information I had to intake before I started seeing success in trading with the way, with how much he teaches. All the stuff he teaches is extremely valuable. The only thing is that it takes a lot of practice and a lot of your time. And I don't know for you guys, but I wanted to start making money right then and there. I did not feel like waiting. I could not wait until I understood his method to start making money. I wanted to start making money now. I was in rough situations, just like many other people. So this is what I developed. This is my version, my perspective of the market maker method. Definitely dwindled down so everybody can understand this. Okay, so who is the market maker? Okay, so the market makers are the people that are clocking in and clocking out. Their mission is to take your money. Their mission is to make you part of the 90% of losing traders in this market. Now, these market makers are found in the Asian session. Basically, they clock in during the Asian session, clock out at the end of Asian session, okay? And that's located, where do you think? Yeah, Asia, okay? So now, next is the London session, okay? So London session comes, Asian people clock out, London people come in, the London market makers clock in now. Now they try to take your money. So it's basically clocking in, clocking out throughout each session, okay? Different market makers come onto the charts, onto the market to try to take your money. They each come on with the same goal, take your money. All right, so what I'm going to teach you is how they think, how they try to take people's money, so you can trade with them and not against them. One second. No questions so far. Okay, good. Okay, so now let me tell you guys this. The market maker is limited to how much they can move. They can't just move the charts however it is they want. They can't just go up and down thousands of pips each day. No, that's not how it works. They are limited to how much they can move. So it takes millions of dollars to move the market. That's millions of dollars they are losing to gain more by trapping traders, by taking traders' money. So there's a limited amount of pips, a limited amount of movement they can make per day, per week, per month, per year, and so on, okay? So don't think they could just move the market like crazy and just take your money. No, that's not how it works. Otherwise, there wouldn't be a 10%. There would be a 0% of winners. Okay, so the intro to the market maker method, my version at least. I don't know if I should change the name or not, but objective number 1, induce traders to take positions, okay? They're convincing traders to take a certain direction of trades, whether it's buying or taking a trade long or short. Okay, I'm going to talk to you guys in that language now so you guys can get it through your head. So they're convincing traders to take these trades. They're doing it on purpose. They're moving the market a specific way on purpose because they're preparing to take your money. Okay, so they induce traders to take these trades. Now, how exactly does a market maker do this? Okay, they do this by consolidation. Remember, consolidation is when the market is moving sideways. It doesn't have a true direction, a true trend. Okay, so when the market is moving sideways, we all know, we've all been there in the beginning of trading, or whether you're 2 years experienced, each one of us has felt the waiting game. Basically, we are not patient. We want to take a trade now. We don't want to. We have to go to work in 2 hours. I want to take a 2-hour nap before I go to work. I'm just going to place a trade now, even though the market is moving sideways. That's what the market maker is trying to do. They're trying to make people place these trades for a specific reason. So consolidating is a form of is a way the market maker traps these traders. Okay, so now another way is causing panic and fast, rapid movements in the market. Now, many people believe that news is news reports, things that are happening in the world, the reports that come out, that's the direction the market is going to move. If you trade like that, you need to stop, because news does not influence the direction of the market. It influences movement in the market, but in reality, the market maker is the one who decides the direction of the market. Okay, so news does not have an influence on the direction of the market. All that is BS. You can just throw that out the window. We do not believe in news in this room. Now we can use news for our benefit. If a big news report is coming out, we can expect big movements, and I'm going to show you how you can trade and make money off of these big movements. Okay, reversal formations, that's another way. These are formations that trap traders into thinking something when in reality it's actually going the opposite direction. Okay, so I'm going to show you guys these formations, very easy to learn. Another way people, market makers, take your money is trap days. Trap days are Friday and Sunday. What are trap days? Trap days are where the market maker, everyone knows the times of the market. If you guys don't know, it opens Sunday, 2 p.m. Pacific time, 5 p.m. Eastern time, basically when New York session ends. Okay, but yeah, when New York session ends, that's when the market opens Sunday. Okay, so market opens Sunday, 2 p.m. Pacific time, and it closes on Friday at 1 p.m. Pacific time. Sunday at 2, Friday at 1, for those that don't know. And in between those times, it's open 24/7, 24 hours a day. All right, so now Fridays, I'm pretty sure most of you people know or have been advised not to leave a trade open during the weekend. And I'm going to advise the same thing. Market makers try to leave your trade open during the weekend. The reason why is because if you're trading on Friday and you're so far in the negative you believe it's going to come up the next week, so you leave your trade open, you don't know what can happen during the weekend. A huge war can break out. The president can die. I hope he doesn't, but I'm just saying what the market maker is trying to do. Big news can break out. Okay, so this stuff that can happen over the weekend will influence the market the weekend coming. So that's why we do not leave trades open for the weekend, because you don't know what can happen during the weekend. And if you're so far in the negative, when the market closes, you can't close your trade anymore. You have to wait until the market opens again to close your trade. Something can happen over the weekend that causes you to go even more in the negative, for you to lose your account, blow your account, stuff like that. That's why we do not carry trades over the weekend. I'm pretty sure you guys got the point now. Sunday is also trap day. What I mean is Sunday, the day. I'm not talking about the whole 24-hour period where it opens Sunday and then resets. Okay, Sunday, Asian session. You want to look at that. Dead gap and Asian session on Sunday are used as traps. Now, it's used because they want to trap you on Sunday, beginning of the week, so they can take your money for a period amount in the week and then decide to go its true direction, which is considered the midweek reversal. We'll talk about that more later in the training. Excuse me. Once again, if you guys have any questions or anything, go ahead and post it on the post I've made with the link, or in any of the chats. Okay. Now, the objective number 2 of the market maker. After causing traders to make irrational decisions, meaning trading the wrong direction of the market maker's true plan of the direction of the market, now it's time to take your money. Now, how exactly will they take your money? So The market maker is going to make a formation, is going to cause rapid movements in the market, is going to use news as an excuse to take people's money. Most of these stuff are called fake outs. They're faking one way so they can go its initial direction. All right, so there's other things that you need to note down. Stop hunts are also used to take your money. Opening and closing of the spreads. Now remember, I said the spread is the pips, the amount of pips in between the bid and ask price, between the red line and the white line. So they can open and close the spreads. Okay, they can make it larger so that you're more in the negative. You start off more in the negative. Now, the market maker can see your trade. They can see if you're in trouble. They can see if you're so far in the negative. They can see where your stop loss is. They can go ahead and move the market so they can hit your stop loss. Okay, so this is, you need to be aware of all the things that the market maker has potential to do.
So Danny, can I give a personal example of how they can use the spread to work against you to pretty much screw you over?
Yeah, of course.
All right,
Yeah.
so check this out, guys. I was trading in U one day, the New Zealand dollar versus the US dollar, right? And during news is really when they can manipulate the spreads to really work against you. So I had a 50 pip take profit, and the price went 13 pips past my take profit, but never triggered my take profit. And it came all the way back up, and I wound up like only making about 25 pips in profit. So when I called my broker to see what had happened, I found out that during this particular news, the market maker opened a spread up to 20 pips, literally 24 pips, which means that price would have had to go 20 pips past my original take profit in order for it to activate that particular order or to fill that particular order. So you always want to make sure that when you're placing your stop losses or when you're placing your take profits, that you take into the fact or you add into the fact or to the equation the spread. You always want to include the spread when you're making your stop hunts. I mean, when you're making your take profits and stop losses. I just want to let you guys know that. Yeah, that spread can really work against you. It can really screw you over. I can't describe how mad I was that day. When you're right about where it's going to go, where the market's going to go, and it goes that direction, but because of the spread, your take profit doesn't hit. It can be really frustrating. So for one, always take into account the spread. For two, if you can, to the best of your ability, when you're in the trade, do not leave the computer if you can. All right, I'm done.
Thank you for pointing that out. Yeah, he's right. Make sure you guys take that into consideration as well when trading. Let's see. So, yeah, the market maker can see every single thing. So just make sure you are aware of that. All right, so consolidation, market is moving sideways. That's a formation that the market makers use to trap traders. 1 second. Okay, so for those that cannot see the two lines, the bid and ask price, the red line and the white line, this is what I want you to do. So you guys can see it. Okay, so let me take it off really quick. All right, so if this is what it looks like for you, you don't see a red line. What I want you to do is right click on a chart, go to properties, then go to common. Okay, this is for MetaTrader 4. Okay, I'm not sure how to do it on other platforms. I haven't used other platforms. So you go to comment and then you click on show ask line. Then you're going to click OK and it'll pop up. Alright, so
wait.
Now you know.
I never knew that. Can you do that again, please? That just blew my mind. What the fuck?
You're going to right click go to properties, go to common, and check show ask line.
Wow. Good stuff. Love it. Thank you.
Dude, you've been trading for so long and you never knew
Bro,
that.
I just calculated it straight in my head, bro. I just knew where it was.
Oh
I never actually
gosh.
seen the physical indicator like that. That's pretty tight.
All right, so hopefully everyone has that fixed. All right, so consolidation when the market is moving sideways is a form that the market makers trap traders. Trap days, you guys already know this. Their initial mission on Friday is to trap traders for the weekend. Now these are formations I'm going to be teaching you guys. We have the W formation, otherwise known as the double bottom, the M formation, known as the double top as well, and 3 hits to the high and to the low. Three hits to the high and to the low can also be known as a triple top or triple bottom. Okay, so that's it for these slides. What I'm going to do now is open up some charts. I'm not gonna show you guys the method just yet. What I want to show you guys is how to work the MetaTrader 4 platform. That way, you guys get familiar with being able to place orders, knowing how to use horizontal lines, stuff like that, so you can mark up charts and see formations and see all this stuff I'm going to be teaching guys in the near future. So first things first, you should know how to log into your account. Okay, you should know how to log into your account. Yes, this video is going to be recorded. Once this video is stopped, I'm going to be editing the video and it's going to be posted this week. All the videos that are going on this week are going to be posted this week. I can't tell you if it's going to be tonight, tomorrow, or the day after, but it's going to be by this week. Okay, so first things first. This top chart right here, because the market is open, if you move it to the left, it'll automatically go back to the current price. So once, okay, this is a horrible example. This is go. Let me go to a currency. Okay, so you're moving, and it's not letting you go to previous days or anything like that. It goes back to the current price. Okay, so if you do want to move and see history, so you guys can see how the method works and whatnot, you're going to unclick this green arrow, okay, and then you can start moving, and it's not going to automatically go back. That was very annoying when I first started, and I had to figure that out by myself. So another thing that I like to do is I like to click this one here. This red one here basically shifts it to the left, so you can it makes it more visible to traders. At least for me, it does. When you have it over here, it kind of gets annoying. I kind of want to see a clear view of where current price is. So you can shift it to your liking. So right here, these are time frames. So you have the minute 1 chart, 5-minute chart, 15-minute chart, 30, all the way up to the month chart. Now what this means, if you click on the 1-minute chart, each candle here takes a minute to close. So basically, as soon as a new candle opens, a timer starts, in a minute it closes. It doesn't close by price. Okay, it closes by time. So each candle is a minute long. 5 minutes long on the 5-minute chart, 15 on the 15-minute chart, 30, and so on and so on. Okay, that's how long each candle runs. Okay, so now to zoom in and zoom out, pretty obvious. Okay, now what do these mean over here? This is a horizontal line here. Now you will be using this most of the time. Okay, so you can paint horizontal lines. You can edit it by double clicking and then go into properties, color, name of it, stuff like that. Okay, you can make it thicker, thinner, your choice. Alright, so now we have that. We have the diagonal line. Most of the people, they have trouble with this because once if they use it for the first time, they get this here, a continuation of a line, and that's not really the one you want to use. So you're going to click it, unclick Ray under parameters, then press OK. Then it turns into a ray. I mean, it turns into a it's not endless. Okay, so you have that. Then you have text. You just click on the letter A, comes up like this. Type in whatever text you want. All right, and then you have a rectangle. This is to highlight things. Okay, you click and drag. Then you could double click, choose a color that you want. You can use it as a background. Your choice. All right, so you have that. Now, we always use candlesticks. There's 3 options. You have the bars, open and close bars, candlesticks, and the line chart. We use candlesticks. I'm going to be teaching you in candlestick form. Okay, so there's that. Now, to place a trade, there's 2 ways to place a trade. There's a one-click trading. Okay, so you're going to right-click, go to one-click trading, click it, and this window will pop up here on the top left. Now, you can place your lot size here. Okay, well, no, it doesn't matter. All right, and then you just click buy and sell. For the first-time users that use this, a window is going to pop up, and it's going to have the terms and agreements and whatnot. Agree to the terms and agreements, then press OK, and then you'll be able to start using this. Okay, you use that mainly when you want to get into a trade very quickly. Okay, and now to place a regular order, what you do is you will go to new order here. Then you're going to make sure, first thing you're going to make sure is you have the correct currency. Okay, you want to make sure you have correct currency. So Euro Audi, if you want to trade Euro Audi, which is the Euro and the Australian, you're going to make sure it's that one. You're going to choose your lot size. You're going to choose whether you want to stop loss or not, take profit or not, and then you're going to place a trade. Now this is a demo, so I'm going to go ahead and place a trade. Show you guys an example. Now there's different types of trades. Okay, market execution. What that means is the trade goes into the market at the current price. Now there's pending orders. What pending orders mean, it's going to pop up here: buy limit, sell limit, buy stop, sell stop. Okay, what these mean is basically you are you're basically predicting the future. You believe price is going to go a certain direction, and then it's going to activate your trade when price hits that current price you place the order on. Okay, so here you have buy limit, sell limit, buy stop, and sell stop. Then you would choose the price that you want it at. Okay, so you choose a price here, and and once you choose a price there, when current price hits it, that's when the trade will open into the market. Okay. Now the differences between buy limit and buy stop. Basically, what you're doing is, Let me place a trade really quick. 6, 4, 5. Okay, so as soon as you place a trade, this pops up here. So a buy limit, what it means is basically you are predicting that the market is going to come down, hit that price, activate your trade, then shoot up. Okay, so you are buying, but you're putting it at a specific price below. You have to make sure you put it below the current price. Buy limits cannot be above it. That would be a buy stop if you want to put it above it. So buy limit, you're predicting that it'll come down here. Remember, buy low and then it'll shoot up and then sell high, right? Okay. So you're buying low. You're predicting that it's going to come to this price. It's going to activate it. Then it's going to shoot up, making it a buy. Okay. Now for a buy stop. All right, to cancel this trade, what you're going to do is you're going to go over, hover over the green dash line, and then press delete. Okay, then once again, this thing is going to come up, accept the terms, press OK. I don't know why I didn't delete. Okay, there. All right, so now a buy stop. You're going to go to pending, select buy stop. This one you're going to set price above the current price. Whoops. 46010. Oh, my mistake. Okay, so I place a buy stop. Now, this one, it has to be above the current price. What it means is you're predicting that it's not going to go any lower from this price. It's just going to shoot up. Okay, so once it starts shooting up and it hits the price of your pending order, what you're predicting is going to hit it and continue up. Okay, that's what buy stop means. Now, with sell stop and sell limit, it's the complete opposite. What you're doing is you're predicting that with a sell limit, price is going to come up to this price, then shoot down, or if you place a sell stop, it's going to, let's say the sell stop is over here where this yellow line is. It's going to stop, continuing up, and just shoot down, activate your sell stop, and continue going down. Okay, that's what sell stop means. All right, so that's how you place. That's what pending orders are, the different types of pending orders. So now let's do a quick one. Okay, so I believe the window should pop up when this window should pop up when I place a trade. So I'm going to go ahead and place a trade. I'm going to place a sell. Okay, so then the window didn't pop up, but as soon as I place a sell, you can see the green dash line here. Okay, so now to edit, let's say, because this is quick trading, so to edit, let's say you want to put a stop loss or a take profit, what you're going to do is you're going to double click on it. This window will pop up. Then you will edit your stop loss or your take profit, put where you want those to be. Then after you edit it, this right here where it says modify, that it's not clickable because you didn't edit anything. If you do edit something, go ahead and click modify. It'll be a selection once you finish editing. If you don't edit anything, you can go ahead and close it out. Okay. Now, a way to monitor your trades, you're gonna go to this window here. It says terminal. Okay. You're gonna click on that. Okay, now this thing is going to pop up here. Okay, this window shows all the trades you're in. So let's say you go place another sell, another buy. Okay, all the trades are going to pop up here. Now you can view it in your currency, how much you're in the negative or positive, or you can view it in pips. You right click on the trade, go to profit, then go to points. These are the amount of pips here. Okay, I am currently -3 in this trade, -2 pips, -6. You don't count the second digit. When calculating your pips, you never count your second digit. Okay. Now, if you want to close your trade rapidly, you just select the X mark next to the trade off of your terminal. Close it, close it, close it. Now, that's probably the worst record I've had in the last few months. 3 trades lost in a row. So, you guys are lucky this is coming. All right, so that's how you close a trade. That's how you 2 different ways to open a trade. Now, another thing, if you guys want to look at different currencies all at once, what you're going to do is go to Market Watch. Market Watch opens the windows of all the currencies available for you to trade, as long as metals and different other types of stuff, crude oil and whatnot. So you're going to select another pair, chart window. All right, so now you're going to select, let's choose 4. Select 4. Now they're going to come up in tabs. One second. They're going to come up in tabs at the bottom here. So you can choose which one you want to look at. But if you want to look at all of them at once, you're going to select this tile here. Okay. Now it arranges it automatically. So you click on that, and you have all 4 windows open. Now to manage one of the windows, you're going to click on it until it's highlighted. Then you're going to switch time frames, whatever it is you want to do. Click on this chart, switch time frames, whatever you want to do. Okay, so that's how you do that. Once again, if you guys have any questions, don't hesitate to ask. So that's how you do look at multiple charts at once. Now to upload it, you just maximize it here. Okay, so that's basically it. Indicators, you will find indicators, meaning moving averages, Fibonacci, stuff like that. You can find that all under this one here, green plus sign. Okay, click on that. You have everything that's available for you to use. All right, and I will be telling you guys what you guys will be using with this method. Okay, so that's basically it for the intro to the market maker method, as well as the MT4 platform and Forex in general. Okay, if you guys have any questions, you guys can message me. Cyrus, do you think I'm missing anything?
Yeah, you missing never mind. Now you good, bro. We getting into the method. My dog Yoma ready to make some money, I can tell. We getting into the method tomorrow.
Yeah, tomorrow we're gonna go more into the method. Yeah.
I don't know about y'all, but I'm fucking excited, man. I'm ready to teach you guys this shit. This is the most solid method out there in these foreign exchange streets, man. So
I couldn't agree more, man. I couldn't agree more. We're all gonna be making money in this, man.
Yeah, for real. But yeah, everything was solid, bro. You did a good job of teaching.
Okay. Sounds good. Sounds good. I don't believe I'm missing anything.
How many people were on this webinar? I can't see it from my angle.
It was about 25 earlier. Max, I think I saw about 25. But man, that's weak. I need a couple hundred in this, man. Well, no. Shoot, bro, I'm trying to teach more people.
It's like 38, bro. That's a pretty solid turnout.
Yeah, man, but I'm not proud of it. No, I need to help more people. I'm helping you guys for free, man. Invite anybody you guys can. This is free knowledge here. I'm teaching for free. I'm giving you guys a method that's, I believe personally, I've created a method that is the most profitable in the market. I'm telling you guys this because from experience, from the students that I've taught, they're all seeing results. And they're all catching crazy pips because of this. It's a simple method. Anybody can learn it. Okay, so I really need you guys to be consistent with this, show up to every webinar, study the heck out of this, okay, because I'm giving you guys a crazy method that you guys will be using for the rest of your trading life. All right, this is very accurate and a very profitable method I'm going to be teaching. All right, Cyrus, anything you got to say?
Yeah, appreciate you guys for showing up. I'm going to try to get some rest. Whoever's down to trade London tonight at about 3 o'clock in the morning Eastern time, let's do it. I'll be up.
All right, those are for the experienced ones. For the beginners and stuff, I would recommend not to, because you guys are going to be just completely lost. Okay, so also, if you guys want to just get a feel for how the environment is, we all trade together. One thing, we all trade together. We don't trade alone. We're not loners over here. We actually make friends with you guys, okay? So we're all in this together. If you have a big mole in your face, we're not friends, okay? I'm just kidding. Don't. We are friends. I'm friends with everybody. All right, so we all trade together. We all help each other out. That's what we're here for. We are teaching everybody and as many people as we can. And once again, it's free knowledge for you guys that I'm giving you guys right now, okay? So next webinar will be tomorrow, same time, 7 p.m. Pacific time, 10 p.m. Eastern, and 9 p.m. Central time. All right, so we will see you guys mañana.